This upcoming week is going to be crazy for Tesla as well as the broader markets. Now, Tesla specifically could be a huge beneficiary if this week goes as planned. Now, we're going to talk about my expectations for this week as well and everything that you should know heading into this new trading week. We're also going to cover everything that is happening lately with Tesla, specifically over this weekend, any news that you need to know. If this is your first time to the channel and you like Tesla stock, you're an investor in Tesla, or you want to stay up to date with everything going on in the markets as well as with Tesla every single day, this is your one-stop shop. We keep you informed and up to date. Hit that subscribe button as well as the like button. Now let's go ahead and get straight into it. Dan Ives said on Friday that Tesla is like investing in Apple in 2008 and 2009. He says, quote, "We view Tesla where Apple was in 08 and 09, as the company was just starting to monetize its services. I've opined that Tesla is playing chess while other automakers are playing checkers." This comes at the same time as other analysts are saying Tesla stock is literally 1,000% overvalued and should be priced at $24, at $26, at $80. We've seen these articles over and over again. And I don't want to give the bears too much credit here in this video. I know you guys don't like that. And I don't think they should get any credit, at least not on this channel, because they're dead wrong. You know, Tesla has so many things going on. Tesla will be the most valuable company the world has ever seen if you give it some time. The stock's not dropping back to any of these prices that these bearish analysts remotely think is possible. And really, a lot of analysts don't expect that either. Matter of fact, after Tesla's latest earnings, you haven't seen one price target downgrade on Tesla stock. Not a single one. You have seen analysts raise their price targets from 300 to 330. Dan Ives raising his price target from 300 to 350. Even some of your most bearish analysts, like Ronald Jewishcom from Guggenheim, raised his price target from 112 to 125. And he has a sell rating on Tesla. And they're still raising their price targets. The average consensus price target has moved from $180 per share 2 months ago to $235.82 today. But why is the stock falling? I mean, what is really the root cause to this? Well, let me tell you. It's the fact that Tesla said that they might cut prices in the future. He said if times get turbulent and they needed to cut prices, they would be willing to do that. And I think that's just the case of Elon being a little too honest, because he's got sued a little too many times, right? A few too many times. That's what happened on earnings. This is a buy the dip opportunity, especially if this week goes as I expect it will. Tesla stock actually did pretty well on Friday and was positive by in between 1% and 2% for a couple hours in between that 1 and really 2:30 time period Eastern Standard Time until that end of the day sell-off. But Tesla bottomed on Friday at 255. It retraced all the way back up to 265. And then the stock got hit towards the end of the day, which is very typical of Tesla during times of volatility in the broader markets. And I think that is really what is going on. I don't think this is a sell-off based on Tesla's earnings at this point. This is a sell-off based on this upcoming week and the potential bad news that we could get from the Fed, from earnings, as well as the NASDAQ rebalancing. Based on Friday's trading action, it looks like 255 could be the low for Tesla in this earnings sell-off. Now, what I have done here is connect a diagonal line, connecting the lows that we seen back here in March of 2023, connecting resistance levels that we seen after that low was hit and we started to bounce, and the lows that we have seen back here in June and where we are currently trading at. And you can see connecting these lines, well, at one point on Friday when Tesla was 255, if we would have closed there, it wouldn't have looked so good. Well, you retrace back up and you're back above this trend line. Odds are, if you hold this trend line, then you're going to follow the trend line. Not to mention, you have recently seen a golden cross. That was obviously before earnings had actually happened. And the RSI has reset back down to under neutral. Technically, Tesla stock is a little on the oversold side. And note that we still have held massive gains so far in 2023. So some of these factors are very much indicative of a bounce and at least a flattening out consolidation period before that ultimate upside move. Now, if you guys have not seen the video that was put out yesterday where we talked about licensing full self-driving and how that could boost Tesla's EPS by over 50% on a conservative model, a very conservative model, and ultimately send Tesla stock to new all-time highs, check out the last video that was posted here on the channel. I think you'll get a lot of info out of it. Nonetheless, this week in the markets as well as Tesla is going to be big. And I want to start with a potentially very bullish catalyst for Tesla. Now, we're going to try to go over this as simple as possible so this really sticks with as many of you guys that are watching this. But the Fed is on Wednesday. We're expecting a dovish hike. What that means is the Fed basically comes on and they say, yeah, inflation's doing well, and we see inflationary pressures abating, wage price spiral is no longer a concern. We're optimistic about a soft landing. Some of the same things that we have heard for the last couple of Fed meetings now, but they raise rates and likely don't give us clarity on if they will raise rates again or if they will pause. But odds are they will lean more towards a pause, right? That's what the markets are currently pricing in. That's what we're expecting as far as the Fed fund futures are pricing in. What this will do, anything that involves credit, some of your fintech financials, your home builders, your auto companies, not just Tesla, your auto companies as a whole, likely get a boost off of this for a couple of reasons. Fed signaling they're almost done raising rates, or maybe this is the last rate hike. Well, that puts a lot less pressure on those sectors because that means inevitably rates are going to fall. And obviously at that point, auto, housing, fintech kind of names, anything that has to do with credit should do well as interest rates come down. We see that in mortgage demand numbers. We get weekly. When rates fall, mortgage demand jumps. When rates go higher, mortgage demand falls. We get the same thing with auto data as well. And it follows interest rates perfectly. It always has, and it likely always will. So that could be a big benefit to Tesla's business. Now, think about why Tesla stock is falling in the first place right now. Because Elon said, well, maybe if interest rates keep going higher and the affordability of getting a auto loan, which is about 90% of how people get into new cars by getting a loan, well, they might have to cut prices if rates keep going higher. If it doesn't look like rates are going higher, well, those inevitable price cuts that some people are expecting with Tesla from here, the rest of 2023, 2024, it's going to become a lot less likely. So that's another big potential reason that Tesla could start to rebound, even make that upside move. And the final one, in which I don't think a lot of people are expecting, because this is more along the lines of psychology of markets, and that's what I like to specialize in, right? That's why we've been right on so many things so far with Tesla. This rally, the bottom in January, we have called basically everything out perfectly. It is the markets going away from your stable big tech names, your Apples, your Microsofts, your Amazons, these companies that are not really your growth stocks. Like if you're investing in Apple, Microsoft, Amazon, you want a almost guaranteed just 5 to 10% a year. That's what you're expecting. You're not expecting these stocks to double or 10x from here, like a potential Tesla would. Well, the markets in 2022, and especially after the banking crisis, looked a lot closer at some of those names, your Apples, your Microsoft. That's why those stocks are at all-time highs right now. Well, when rates go down, investors, they say, hey, let's break this down as simply as possible. They say, hey, bond yields are going to fall. That's good for growth. You want to be in long duration assets. But where do we really want to be in potentially an economy that heads into a recession? It's going to be your mid to large cap tech, but tech that is actually growing, because then you get the best of both worlds, right? Odds are Tesla's business does not collapse. These analysts that predict that are smoking funny stuff, right? But you want something with growth because interest rates are going to be falling. So that could be a huge potential catalyst for money to flow into Tesla stock. Not to mention that Tesla's fallen from $300 we seen the day of earnings to where it currently sits now at under $260 per share. Hedge funds, institutions, they've been raising their price targets, or analysts, I should say, have been raising their price targets. Yet Tesla is the most uninvested in big tech stock out there. There's more money in Amazon and Google. And Tesla's obviously a much better investment based on growth, based on future prospects. So for these reasons, I think this week could be big if the Fed gives us things that we want to hear. And odds are they do. But there's still a big risk this week, and that's going to be big tech earnings. Even before big tech earnings kick off hot and heavy on Tuesday, a big problem could be the NASDAQ 100 rebalancing. This is going to happen on Monday before the actual market opens. So likely over this weekend, they're actually doing the rebalancing. And Tesla, it's not as big of a deal. You're going to drop from about 4.5% to about 3.5% of the weighting in the NASDAQ. But some of your big tech names like Microsoft, which also reports on Tuesday, are going to lose over 3%. Microsoft and Nvidia are the biggest losers here. They're both losing about 3%. Google is losing over 1%. Apple is losing over 1% weighting. Amazon is losing about 1.5% weighting. And Meta is losing less than 1% weighting. So this is going to be direct selling on these stocks. And it could cause the broader indexes to fall. And Tesla would not be immune if the broader indexes fall. It's possible that Tesla could rally at the same time, but it's not statistically likely. So I don't really have high hopes or expectations, at least for Monday. On Tuesday, big tech earnings come in hot and heavy. Tuesday pre-market, you're going to have smaller names such as Verizon, GM, GE, Spotify, Raytheon Technologies, Next Era Energy, Alaska Airlines, but another one which could be big for Tesla, and that is GM. I do have a trade on GM as well as many other stocks as of right now playing this earnings season. If you guys want access to all of my trades every time I make a trade, come talk to me, come chat with me. You have problems, you're happy, you got issues, we can figure them out together. If you want to be a part of it, link down below in the description of this video. Tuesday and after hours, that's where things could really hit the fan. Microsoft and Google will be reporting earnings. Some people find it notable the NASDAQ rebalancing is happening the day before Microsoft earnings, and that does not look like a coincidence. So it kind of is putting a bad taste in investors' mouths heading into this week. And that's probably why Friday and Thursday were so rough for the NASDAQ in particular. I really don't have any opinions on Google. I think that one could go either way. Obviously, both of these earnings are going to be big around AI. And investors probably want to see some kind of AI revenue coming in at this point, given the stocks have rallied so far off of AI hopium, essentially. Wednesday, you're going to get Meta in after hours, and that one's going to be important for advertising. Advertising is a big component of our markets. And then on Thursday, you're going to get companies such as McDonald's, MasterCard, Crocs. I'm heavily invested in Crocs, so we will be watching that one very closely. Could be a good opportunity to trade that one as well. Thursday and after hours, Intel, Roku, First Solar, and Enphase. And then on Friday, a lot of your energy companies, ExxonMobil, as well as Chevron, will be reporting earnings. So I think it's important to provide a little bit of clarity considering the NASDAQ rebalancing. And so I think it's important to provide a little bit of clarity on the NASDAQ 100 rebalancing alone, because this has only happened 2 other times in history. Back in May of 2011, and it's notable to point out, back in May of 2011, that was your high of the cycle. And the NASDAQ ended up falling about 20% within the next 3 months or so around this time, probably in part because of this rebalancing. And this was the high right here. It happened on May 11th. And then you fell 20% to the lows by August. So about 3 months later, you were 20% lower on the NASDAQ. It happened as well in 1998. Same story. The NASDAQ fell about 20%. Although it took a little bit longer, it took about 6 months before the NASDAQ actually hit that low. We are also going to get economic data that really comes in Thursday and Friday, but I think the markets are going to be reacting to big tech earnings as well as the Fed more than they will react to this data. But if the data comes in way worse or way better than we expect, well, that would give you a big move in the markets. But if this data comes in line with expectations, I don't expect a huge move. Now, GDP, we're expecting the GDP growth rate quarter over quarter, advanced data for Q2, to come in at 1.8%. If this comes in really low, boy, you're going to have a problem. If this comes in high, markets are going to rally. That's the simple fact of it. You want to see good economic data right now because inflation is falling. It's clear. It's obvious, right? We're seeing inflation year over year at 3%. You want to see good economic data. You don't want to see signs of a recession and signs of a hard landing. Durable goods orders come in month over month as well at 8:30 in the morning on Thursday alongside GDP, and we're expecting 1%. Again, better is good, right? Weaker or worse data is bad. And then on Friday, you're going to get core PCE month over month. You're expecting that to come in at 0.2%. That's fine. 0.3%, that's fine. Anything above 0.4%, I think you get a knee-jerk, sharp downward reaction in the markets. Personal spending month over month, you're expecting that to come in at 0.4%. Again, if this is positive, that's fine. Personal spending has been so negative as of the last year or so. You really haven't seen too crazy numbers here. That would be fine. Personal income, same thing here. You just don't want to see this above 1%. You really would want to see this fall a little bit, like to 0.3%, even 0.2%. That would really put to rest those fears of a wage price spiral. Considering all of this upcoming potential Considering all of these catalysts that are coming this week, let's take a look at the option activity that we seen on Friday. We had a positive order value of 47%. $332 million worth of Tesla options were bought. This was comprised of about 1,200 orders. Now, this is lower than what you have seen recently, but it's pretty neutral. It's around 50%, nothing to be concerned about. Once you get to 30% or in the 20s, that's where, hey, maybe we have a problem here, and maybe the sell-off could last a while. Over the past 1 week, you've seen almost 7,000 orders from hedge funds and institutions placed in Tesla options worth about $3 billion with a positive order value of 64%. So things do look more positive than not. And I also think a factor that could keep Tesla stock a little bit higher, even if some of this data does not come in as expected, if big tech earnings are bad, if the economic data is bad, is the simple fact there's massive short positions out there. Covering at 260 or 250 looks a lot better than covering at 300. So some of your shorts that got in at 120, 130 that realized Tesla's not going back to those prices, well, they might start to slowly cover on short positions. That does mean buying pressure on Tesla stock. That could help things out. But as far as the Fed, I don't see any other outcome here besides a dovish Fed, besides a dovish hike. Maybe even no hike. That would be great news, and Tesla stock would rally. So I think the most certain thing this week is that Tesla could see a big benefit to the Fed meeting. But again, earnings could be negative, economic data could be negative. As long as those things come in line with expectations and there's no real shockers to the downside, I expect this week to be bullish for Tesla. Now, what could happen as far as the actual price action if we take a look at some of the technical levels? Well, in a worst case scenario, if all hell broke loose in the markets, the S&P and the NASDAQ fell 20%, well, Tesla could fall back to $200 per share. But that is what it's going to take. Highlight how aggressive a broad market sell-off would have to be to get Tesla to drop to $200 per share. A drop from here at $258 per share to 200 would be a fall of about 23.5%. That's not going to happen unless the markets utterly collapse. What could happen is the markets fall 5 to 7% and Tesla stock falls about 8% down to 240. That would be more in line with what I could actually see happening. Odds are you bounced at 255 and you'll trend higher into that 270 range even by the end of this week as we get through big tech earnings, as we get through the Fed, as well as some of those economic data points, and then ultimately trend up higher from here. But earnings were good for Tesla, so I would not be in the camp of betting Tesla falls 20, almost 25% from here. That just isn't going to happen. Let's just be honest here. Something would really have to go wrong with earnings, with the Fed, with this economic data to get that to actually happen. So that is it for this video. If you like my perspective and you want to stay up to date with everything going on every single day with Tesla as well as the broader markets, well, hit that subscribe button as well as the like button on your way out of this video. If you want to take it a step further, you really like my insight, you want to come trade with me, you want to come talk with me every single day, 24 hours a day, 7 days a week, no matter what's going on in the world, we're there, we're available. Hit that link down below in the description of this video for the trading community. Nonetheless, let me know what you guys think about this down below in the comment section, but most importantly, enjoy the rest of your day, and I will see you in the next one.